Okay, everyone. Hi, it's great to be here. I'm seeing so many people and so many familiar names from all around the world. For those of you who don't know me, my name is Hilla Brenner. I'm the Managing Director at Techstars Aviv, and so happy to be with you during this really exciting session with these three guests that we have here. I myself have been an entrepreneur my entire life, raised a lot of money, succeeded and failed a lot of times. I know how difficult this must feel to be part of investment strategies in this climate during this very difficult time. And so I decided to put together this forum, which are three really dear friends all around the world, to help you understand what investors are thinking about this. So on the line here, we have today with us, I see here about 70 founders from around the world, all of which are either Techstars founders or mentors. And before we start, I'm going to let these really special people introduce themselves. Thank you so much for your time. So we're going to start with Noam.
Hi, everyone. I'm Noam Kaiser. I'm an investment director with Intel Capital. Is the corporate VC arm from Intel, operating globally with a focus on the United States, China, Israel, and the EU. Intel Capital, a little bit about my background, is the third VC that I've worked for here in Israel. Before that, it was the early stage investor Gemini Israel Ventures. And prior to that, Offer High Tech, which was a pre-seed oriented investor arm. In between those three periods, I had my own cloud-based financial services startup, which was later merged and sold into a Salesforce subsidiary. And the last position I had before joining Intel Capital was head of the Amazon Web Services Startup Business Development Team. It's a team devoted to helping startups collaborate with Amazon and promoting their own businesses. In a nutshell, Intel Capital is, although it's a strategic VC, it is financially driven and oriented towards investment of companies that can become major businesses on their own. And it's not a VC that invests according to the need of the business units within Intel. Techstars, 4 years.
And a very special mentor to Techstars Tel Aviv, which will be launching on 7th of June. Some of the members I see here already on the chat. This is a very good practice to introduce yourself while we're talking on the chat, because you never know what introductions can come out of it. So thank you very much, Noam. And we're going to go to Chris. Thanks for your time, Chris.
My pleasure, and welcome to everyone who's dialed in on the call. I see a few names on the chat here who I recognize, which is great. I was only in Tel Aviv in the first week of February. It seems a long time ago. But in terms of background, I guess I've been where you guys are, right? I've been a founder before. I started my startup back in late 2006. And it was a company that thrived during the financial crisis. So I know a thing or two about sort of getting through a crisis. With that said, the financial crisis and this crisis are quite different. I think I've learned a lot, but I must admit that we didn't have to contend with lockdown the last time. So my background is as an entrepreneur. We built up a very successful financial services business and sold it for well into the 9 figures back in 2014. After that, I became a mentor at Techstars, sort of back in 2014. And then in 2015, took over as MD for the FinTech program in London in partnership with Barclays. So I spent 5 years running that, really enjoyed it, learned a lot, got quite connected into the investment community and the startup community, and also did quite a few personal investments. So fast forward to today, I've made 110 investments, 60 of them privately and 50 of them through Techstars. Quite a lot of successful companies are in there, and I've reached a point where I'm just doing my next thing, which is starting my VC fund, which is there in name. It is regulated. It is not deploying capital because similar to the people on the call, I was caught out by COVID-19, and the paperwork has not been signed, and therefore I'm not deploying as a fund. I am deploying as an angel, and I am very much helping portfolio companies. And the number one topic that we've been talking about the last 3, 4, 5 weeks with portfolio companies is, how do I get through the other end? How do I shave cost? How do I raise capital? So I've had a lot of experience speaking to companies like yourselves on the call. So hopefully I can help a little bit. Thank you.
Wow, thank you so much. And thanks again for being here. So Romain, you are the last one to go. Thank you so much.
No, thank you for having me, and hello to everyone on the call. Quick note on myself. I studied as an aerospace engineer, and it's actually one crisis that decided me to become an entrepreneur. It was September 11. The whole aerospace industry stopped. So I had nothing to do, and I saw all of my friends that launched startups during the bubble era, and I said, well, why not me? And I found 2 researchers that were making some great progress on AI. At the time, it was not a hype at all. And I decided to put all of my savings into this company, which grew initially in France, then in the US. We passed the 2008 crisis, and I would have a lot to share about this. And the company was acquired in 2011 by Dassault Systems, the second largest software company in Europe. I ran corp dev for them, and then joined the VC side, and I actually now run the VC that used to back me, Partech, which is a relatively old firm, 1982 in San Francisco originally, and now operating on 3 continents, all the way from seed to growth stage. So from $200,000 to 45, 50 million checks. And we make an investment in a new startup 50 times a year, plus the reinvestments.
Wow, that's amazing. And it's amazing to have you here because all 3 of you are very connected with Techstars, make investment within Techstars, understand the Techstars network. But if you're so familiar with us, you must know that most of the founders are turning to the managing directors now for advice and asking them, how do we do this? What do we do? Are investors still investing? Should we even waste time on trying to get investments or fundraising? Should we turn to profitability, cut down costs? I mean, there's so many ways we can go about this. So the question to you is, what's your gut feeling about this around the world, especially in the EMEA area? What is your advice to founders?
First, I'm beginning by apologizing for some background noises. The alternative would be to sit with my kids in the house.
Yeah.
Look, the vast majority of the companies that will participate here, I assume, are currently raising their seed fund. Again, that's a broad assessment. But if it is correct, then you're actually in a pretty good spot. I think that the crisis is the best time to start a seed stage startup, and it's the best time to invest in one. I say this loosely. Chris mentioned the former crisis, 2008. That was the year that I started my work as a VC. That was a great timing to start as a venture capitalist, but it worked out because I invested in seed. And we had some great successes there. The reason I'm saying it's a good timing is because as long as you're a seed stage startup, the KPI and the measurement of your success to secure the next financing Series A, is not so much financial. You're not expected to meet very aggressive financial goals here now. You're supposed to develop, create your first POC, prove the unit economics. Yes, maybe get the first initial traction with some proof of concept customers, but you're not in the situation of, let's say, a company that's already raised Series A and now has to meet some revenue goals, about $3 million, $4 million ARR in order to secure Series B. So that's some room for optimism. And the other reason there's room for optimism is because the folks that you want to conduct a POC with, they have time now. I can promise you that. You can find someone that has the time to work on a POC.
That's really great. Romain, do you have something to add to that?
So yeah, I can share a little bit of the situation that is happening on the VC side. So there's been basically two phases to this crisis. The first 2-3 weeks, we're all looking at existing portfolio companies and making sure that they're secure, that their employees are safe, that their financial future is secured. I would say this is behind us now. And I'm talking for the majority of investors. So now we're really looking forward. This crisis is changing one thing, which is we may, because there is more uncertainty, we may keep more reserves for existing companies because it's still too early to know what is the real impact on them and what is going to be their ability to raise Series B, Series C going forward. We don't know, so we have to keep more reserves. So more reserves mean maybe slightly less money available for new companies. Nevertheless, there's been never ever more money available in VC firms than today. There's like 20 billion euros of dry powder available. So people will continue to invest. So if we now look at the second phase, I've seen it myself last week. I announced a new fund. So I received basically a pitch every 10 minutes for the entire week. So the question as a VC is, how do you prioritize when you receive a pitch? You're remote, you can't meet people, out of the noise. And so this is where you need to use your network. And we all know Techstars is all about network. It's about being on the top or being first in the waiting line, basically. And I'm prioritizing based on the people I know or people that I trust enough so that I will trust their judgment. And if they recommend me to talk to an entrepreneur, I will. So cold email doesn't work in this environment. It's really all about finding someone that knows the VC you want to talk to. And by the way, if you can't do this, you have a problem as an entrepreneur because it's always going to be about networking to find clients, recruits, investors, and of course, an acquirer one day. So you use that skill today to reach out to the entrepreneurs you want to talk to. And that's going to be the new normal in the next 6 months at least.
That's what's really interesting that you say that, and congrats on your new fund, Romain. And it's time to move to Chris. Chris, any words of advice and wisdom for our entrepreneurs?
Yeah, I mean, like I said, I've spoken. I think everyone on this call has probably spoken to a lot of their portfolio companies first and foremost. I've been no exception, and I think in the first few weeks it was all about defense strategies. Then it moved on to sort of like mitigation strategies, and then now it's actually we're talking more about growth strategies. And actually, a lot of my portfolio companies are looking to play offense, right? So in the first couple of weeks, it was all about everyone talking about home working, making sure the IT work, keeping people safe. Then it was about cost cutting, shoring up revenue, communicating to all their stakeholders. And now it's interesting. Now we're talking about growth strategies. And I have so many case studies. I could talk for hours, but I could just give you an example of one. I typically invest in fintech. I have invested in non-fintech. And most recently, I invested in a business called Pesky Fish. And what Pesky Fish does is it connects fishermen to, in the past, to high-end restaurants, and over time it would be all restaurants, and they're growing massively. And of course, the crisis hits, and all of a sudden their customer base dries up. All the restaurants close. So what do? Well, you pivot, of course, right? And that's what they did. And then over the course of 7 days, they went from a B2B business to a B2C business. What started with a few WhatsApps out to people, they started getting 50 signups every hour, all the way through the night. And now every morning at 7 a.m. when the catch comes in, the fish is all sold out by 7:10. And last week they took on another 15 vessels that actually brings in fish, and they're going direct to consumer. And what's exciting by this is they did exactly what's right. They started with, keeping their people safe. Then they looked internally to make sure that, their customers were dealt with. And now they're talking about how can we change our model? How can we play offense? And how can we use this time to win market share? Now that won't be the case for every company, no doubt. But what I try to find out on my calls with my companies is what's their COVID-19 offense response, and that's what I think people on this call should look at, because I think that most companies probably have an angle.
That's right. I myself went through the 2008 crisis. I was one of the lucky ones who had a term sheet from Lehman Brothers just before they stopped taking my calls. And it was a very sad story for me, but I did find that startups that kind of survived this were resilient enough and maybe to profitability. So my next question before we start taking questions is, would you recommend a company pivoting at this stage? I know this is a very general question. Should they cut down on burn rate, change business model? Should they stick to what they're doing, what they know best? Should they be trying to raise money if they even have money, or should they not spend any time on this? Should they approach their investors? What is it that you think they should really do in terms of investor, in terms of cash flow at this time?
That's a lot of questions, but
yeah.
I think what Chris said about the pivoting of the company he mentioned, there's something there that every startup can learn from, and that is there is every crisis. Again, I know this is a beat up cliche about the Chinese word that is crisis and opportunity. But this crisis is also an opportunity for every single startup. And if not necessarily pivoting or finding out something that you didn't know, but improving your overall operation. A lot of our startups, and remember, this is happening after 2 years of too much money in VCs and startups, and behaviors that have nothing to do with the lean startup methodology. All of a sudden, startups are beginning to realize, and not just startups, that they can do more with less. That you don't necessarily have to fly all over the world to secure deals. That perhaps not everyone needs to be at home and you have to rent the most fancy offices and so on and so on. This is an opportunity to show resilience and to figure out what is essential and what is not. Because we're all talking about startups here. Startups should not behave as if they're companies that have already performed IPO. So that's one thing. On a high note, Ilan, what you asked, I think that cash is king. The three things that companies can do at this moment is, one, yes, try and cut down and extend your lifespan and your runway, but don't cut down for the sake of cutting down. It doesn't serve any purpose if it doesn't really buy you time. If all you're going to do is demoralize the team and then shut down, you've done nothing. Start with some sort of end game, some sort of purpose of where you're aiming towards, and try and see if you can make it there. Reverse engineer the run rate. Second one, if cash is king, the valuation is not. Understand that, yes, the risk is for the VCs and for you as well. It's really not important now if you're going to pay 5 or 8% more on the series you wanted, as long as you can raise the money. So if that is an option, take the money. You'll need it. You will, in retrospect, you said, I could have used those other 2.5 million, but we had to do it at 25% giveaway, not 32. You'll regret that in retrospect. And the last thing I would say, if you have deals right now that are in top of funnel, that are closer to being closed and converted, focus there. Focus on the top of funnel and not the picks that are in the early stage of engagement with the customers, because cash is king. Because there's more likelihood that you can increase your run rate by closing deals that were very close to convert. Taking something from nothing, from first engagement to closing, is going to be very tough. Those are my 3 tips.
Good, thank you very much. Really great answers. Romain, you have something to say to all these questions?
Yeah, you don't necessarily need to pivot. It, of course, depends on what business you're in at the moment. What we've observed on our portfolio is the 20% of companies that actually benefit from the crisis. They're right in the the right industry with the right value prop. Those need to accelerate. There's the other end, which is 20% of companies that are deeply impacted by social distanciation. And by the way, social distanciation will stay probably much longer than the virus itself. So you have to account for this, and those companies probably need to pivot. And then the other 60%, they're just slowed down by the crisis because they can't talk to their customers, because there's no funding. So they're kind of waiting, but it's not necessarily to pivot. For those that will pivot, I think you need to think about what is going to be the impacts on your clients, whether you're a consumer or B2B. Everyone will think differently after this crisis. Our set of priorities will change. So as a consumer or as a business, your money is not going to go in the same things that what you were investing in 2019. So you have to wonder if your product or your service is going to be in that bucket list or not. And that bucket list is probably going to be the critical things, short ROI, short sale calculs. If you belong to a category of things that could wait 2021, you probably need to pivot. So that's probably the result of that uncertainty that this crisis is creating, is that only a fraction of the products will actually manage to be sold this year. And so you need to talk to your customers and understand is this is something they want to do now, or if they say, yeah, this can wait for blah, 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 whatever reason. And then in this case, you probably need to think about a pivot or at least experimenting new things. Probably more experiments because the world is changing quickly. And I don't think that anyone knows exactly what they will need in September. So you need to have different conversations in parallel.
I love that. Thank you very much. Chris.
Yeah, I mean, that's good advice by Romain there. I agree. I think that, these gradual shifts that, we as entrepreneurs believe in, and that's why we built our business, will accelerate. And it's going to result in a much more immediate behavioral change. So that's exciting because, sometimes we build something hoping the market will catch up to our great idea. And what you might find is that you're on the right track and the market quickly catches up and you can potentially get that traction much quicker. But, you have to sort of look in the mirror and say, what has been my strategy and how long will this thing last? And if you're not on quite the right strategy and this thing lasts for 2-3 years, you're in trouble. If you're at one end of the spectrum, if you own a bar or a restaurant, it's probably the worst business to be in right now, right? But as Techstars founders, I mean, you guys are like some of the best founders in the world, and you just have to make sure that you're nimble. I mean, you're tech businesses, or you should be tech businesses. So I'd like to think that the vast majority of you were actually on the right trend line to begin with, and these changes are just going to accelerate that trend. But a good exercise is to kind of do a lot of reading and talking about sort of like, what are the big themes coming out of this, and making sure that your businesses, address those themes. I mean, obviously working from home, I think this is a big theme. I think it's a safe bet that, in a year, 2-3 years time, if you're playing to the work from home theme, you're probably on the right, you're on the right page. Take out, home delivery, limited contact with older generations. These are some of these big things that we're reading about now. And I think if your business is addressing some of these big overarching themes, you're going to be on the right track. But the main takeaway is communicate with your stakeholders, communicate with your customers, find out how their needs are changing, speak to your investors. And I think getting back to your original question, I think your best likelihood, if you have raised a bit of cash, is probably to do an inside round, right? But no one's going to give you any additional cash unless you communicate with them. And I can tell you right now, out of my companies, I'd say 75% of them have communicated really well to me as an investor and 25% not well. And I think within that 25%, there will be a few that haven't communicated because perhaps things are doing fine, or they've reached a point where they don't need me. But there's actually quite a few that I think are putting their head in the sand, and it doesn't bode well. And if they called me now, having not spoken to me for 8 weeks, I'm not feeling good about giving them any more money. So, I think the best thing you can do is communicate with your stakeholders and your investors.
That's really, really good advice. And luckily, I chose investors that were also entrepreneurs, for seeing both sides of this happen. And I'm going to take one of the questions. The first question I see.
Sorry, Hilla, you broke up there.
Yeah, I think we're losing her.
Okay. I guess I'll take an initiative until we get Hilla back, because I see that the first question that was asked was by Tamar. How do you forecast the change in valuation for seed round during the crisis? Tamar, it's a good question. On the upside, this is probably the stage that's going to be hit less, because again, the expectations at the seed stage, as I mentioned before, are pretty much the same anyway. You're supposed to reach the same, so there won't be a dramatic change there, or at least you're not going to get hit on seed valuations as you are in Series B, maybe C, maybe even A. But expect some premium. The seed investors are taking large risks anyway. They're going to take an even bigger one now. So if the margin for what you give for a seed round lies somewhere between, let's say in the better days, anywhere between 15 and 25% that you're going to have to give away, expect that you're going to give away something between 20 to 35 in this day and age. And again, your ability to get more funding for less equity completely lies on the strength of your team and the story that you're telling. So it's up to you to commit to showing the most promising potential that you can, getting as much done as you can without the money, and creating a very good story, which is what Techstars and the mentors are really good at helping you make, so you can get more for less. But that is more or less, I think, the offset. I wonder if Romain or Chris, if you will agree.
I have a slightly different opinion on this. For me, the valuations are not necessarily the main parameter that are going to change. It's size of the rounds. And with that kind of crisis, as a seed investor, I would prefer to join a larger round than a small one, because I know runway will be important, and we don't know what's going to be the ability to raise a round in 18 months. So it's more the question about how much money can you raise as a founder. And we know that serial entrepreneurs, very successful one, can raise 5 million off 2 slides. For most of the others, it's more complicated. So I'm more expecting kind of a ceiling or kind of a floor in this way, where people might not want to join rounds that are under 1-2 million. So it will be very difficult for those that cannot reach that level. For all the others, it's still going to be a dilution of 25%, more or less, because that's what I've observed in the past, is that it's more dilution driven at this stage. And so it really depends on how much money you're able to raise. And I know that as a seed investor, I will now want to join larger syndicates, so more VCs around the table, to know that in the event of an internal round in 18 months, we have deeper pockets around the table.
And I'll just add to that. I mean, I think everyone on the call will remember from their time at Techstars the famous sort of David Cohen kind of hour kind of video cast on sort of, you know, the conversation and how it goes with investors, and how you get people to say yes and be part of a round and potentially get the valuation that is the correct valuation. And that art is basically making sure you have lots of conversations and get lots of people on board, so you have more than one bid on the table. Ultimately, what's the value of a company with little or no revenue? It's really hard. It's an art, right? If you're 3 times oversubscribed, well, then you could probably get the value that you want, and that value may not be much different than you would have gotten sort of 3-4 months ago. So I think the key is to use a lot of the good practices that you learned whilst on Techstars, and making sure that you first find out who is open for business. And there's lots of things that are circulating on the web over the last few weeks that kind of shows you who is open. And getting warm introductions. So, take Romain's advice and don't do the cold introduction. You guys know better. And then finding out what people's conditions are to say yes, right? If you speak to Romain and he says, "Oh, I quite like you guys," you want him to say, "I will invest, but my conditions are X, Y, and Z," right? And then you need to do that across, many more investors. So you just have to do your work, and you're gonna have to put in practice a lot of the good practice that you learned whilst on Techstars.
Perfect. So we can go to the next question. Okay. What's your take on pre-seed funding?
Yeah, that was the one we.
Oh, I'm sorry.
I see that the next one is from Stefano with regards to public funding.
Oh, Stefano from Italy. Hello, Stefano from Tel Aviv class. And he wants to know what you feel about crowdfunding, crowdsource.
I think this has to do with public or government money coming to co-match private investment. Yeah. I'm in a minority, at least in Israel here. I really don't think it's the responsibility of the public to fund privately held startup, especially in a day and age where there are a lot of needs for public money, and there's probably not a wide enough blanket to cover the entire bed. The entire rationale for public money supporting or co-matching private money is because there is some benefit that the state sees from it, either prospect of the innovation creating more jobs, or eventually the returns in part coming in through form of tax to the country. Maybe every now and then there are, I like, for example, what I saw in the United States, what's called the 3 Ps, which is a protecting salary program, which you can apply to a grant to pay salaries of American employees. And that is sort of a reasonable investment by the state, because it says, okay, we can make sure that no one or less people join the unemployment level. So we're actually investing, in retrospect, we'll be investing less money by helping those companies. I'm not sure we're going to see too much of those bailouts across EMEA. It's very tough in Israel as well. And I have to say, if you look at the amount of money that companies have lost through the potential revenue, even the most aggressive plans by the government are not going to cover the needs. The solution to cross through it are, like Chris says, on your internal investors and your ability to struggle through this period. I wouldn't count on the state to do it.
I tend to agree that you can't really rely on governments long term. However, I never saw any entrepreneur regretting to take money that was on the table. So if someone is willing to offer free money, take it. A loan, take it. Matching a convertible note, take it. Even if someone comes after your round and wants to top it up and it will dilute you a bit, take it. Because we don't know what the next 18, 24 months are going to be. So you won't regret having more money in your pocket right now.
I agree. Just one thing. If it's state money, and this is as a result of what some of our American portfolio did, if you're taking state money, read the fine print and have your board vote on it. Don't take this decision alone. If you're going to take state money, do it as a board decision. There are a lot of fine prints you need to realize there. You're going to have to start giving reports every quarter and so on and so on. Check the fine prints. But yeah, cash is king.
I'm with you. Chris, you want to add?
Yeah, I mean, I guess I agree partially with both of Noam and I would probably take the money. I think the thing is when you look at the UK, there's 250 million that's available. That potentially would be gone in just a few months. It's not a lot of money. I think there's a lot bigger pool, if I remember right, in France to be had. And you're right, like there are strings attached. For instance, the Future Fund in the UK, it's if the government money puts money in, the money that it matches can't be kind of the tax efficient variety, the EIS as they call it in the UK. And what it also means is that any future money that you raised by that company can no longer get any type of tax efficiency from your investors. So the moment you take the government money means that most angel investors won't want to touch you just because there's so much competition out there of good deals and they can't get the tax advantage on your company. But so I think my personal view is that this match funding is probably more for slightly later stage companies, and often I think it's probably to match maybe like an inside round. Because if you can raise outside new capital and that person is willing to lead around, chances are you're probably going to be able to fill around with private capital. So my view is that this is for more established businesses, inside round, so that the person writing the inside round check doesn't have to write as much. And the fact is the scrappy startups will find a way to survive and others will fail. So.
Excellent. Let's go to the next question then. What do you think of alternate forms of funding? We're currently cash positive on a monthly basis of between 10 to 30 K a month and hopefully 50K by the end of the year. Can we raise debt or some other forms of funding apart from traditional VC funding? I hear that a lot from a lot of my portfolio companies and from companies, especially in the EMEA area, and it's an important question. Is there alternate funding that you suggest? What do you think about that?
The best source of funding is your customer. That's the first obvious source of non-dilutive financing. Other than that, there are plenty of other sources. It depends on the business you're in, how much you need to invest going forward, etc. I would start, if you're really starting today, I would start with angels, because again, in this environment, VCs want trust, so they need to know you or know that someone that knows you, but they need proof as well. And not necessarily traction, but proof that you can do what you dream to do. And you have technology, you have some sort of prototype or anything. But if you're really starting from scratch and you're not well known, it's going to be hard with a VC. So we start with angels. You also need to know that corporate VCs, and I'll let Noam comment, are much more active, and they've been very active in the last years. In Europe, it's a third of the money is in startups is now invested by CVCs.
I have to agree. Again, the majority of corporate VCs that are already established, I'm talking about Intel, Qualcomm, Google, Microsoft, and such, they're not stop investing. These are not, first of all, the companies they come from are sturdy. They're going to make it through COVID-19, no matter how long it lasts. And those corporate VCs have already proven that they're beneficial for the corporate to hold on to. Maybe some corporate VCs that are a bit younger are going to stop their activity. Maybe some corporate VCs that belong to industries that have been really hit, like airlines, like tourism, there you're going to see maybe even a shutdown. But in general, yes, corporate VCs have a sort of an opportunity now. to engage. And if you're going to do that, or even if you're going to go to angels, I think you should look at the first tip that Romain gave. It's relevant in any case. It's not just us that are supposed to conduct due diligence over you. You are supposed to conduct due diligence over your investors. If you're going to reach to Romain or to Chris or to me or to anyone, look at what we've invested in the past. Look at our portfolio. Look at our investment focus. Do your homework. I mean, one of the things that I tend to ask the investors when I meet them in the first meeting, even if it's Zoom, what do you know about us? How did you come by hearing? And if they don't have much to say, I begin to think, well, that's the way they're going to behave with customers. They're not going to do their homework. That's really not an impressive way to engage. So do your homework. Try to understand that you're reaching the right investors and that they're working in your specific realm. And the other tip that Romain gave, which is worth its weight in gold, try and get to any investors, be it an angel or a VC or a corporate VC, through someone they know. It catches more eyeballs in the inbox. When I see an email from someone I know, I'll open that email. I'll give it the attention. I'll trust it more. By the way, I think that all of the tips that Chris and Romain and Hilla and I will give you today, they're going to have one silver lining. None of them are going to tell you that it's going to be easy. It's not going to be easy. You've decided to be startup founders. I don't know why you did it, based on my experience, but you decided to do it. So it's not going to be easy. There's no shortcut.
Well, they decided to do it because it's the best in the world, right? And it's the best path. It's the roller coaster of a lifetime. And they were chosen to Techstars, which I always say it's easier to get into Harvard today than it is into Techstars. So you have here 109 founders from all around the world that have been chosen and are now networking. And they're here because they get all this advice from people like yourself. So thanks for that. Chris, you want to add more to this topic?
I'll just briefly. I think the question referred to a company that was actually cash flow positive. So that's great. And if they're raising their seed round, I would probably, when I'm introduced, if I were to introduce that company to an investor or someone in my network, I probably would lead with that, right? So it's like play to your strengths. The average startup that would reach out to a VC might be somebody who's got product market fit and maybe a little revenue. But if you're a startup and you're going for a series seed and you can say, oh, by the way, I'm cash flow positive, I'm 50,000 MRR or something like that, that's something that might step out. So just remember that sometimes people don't get past the third sentence. So when you introduce yourself to somebody or somebody introduces you, make sure they lead with the thing that's remarkable. And I'd say in this market, I'd say here's a remarkable founder who's managed to get to cash flow positive and maintain that even in this environment. That would catch my attention even before I even know what they do.
And I want to reiterate what we said on cold emailing and how bad it is. So I've been in this business for 7 years, times 3,000 pitches per year that we receive. 90%, maybe 95% is cold email. In 160 investments, I've only made one investment that came in cold email. And as Noam said, it's someone that had done their homework. It started with just one line. They were saying, I was looking for an investor in Europe that has invested in both gaming and dating, and I only found you.
Yeah.
I don't know if it's true, but it worked. And I ended up investing in this company. Today it's backed by index, by equity. So I'm glad I made that choice to bring that one out of the noise. But without that sentence that caught my attention, it would still probably be buried in my inbox.
Perfect. Could you share, this was super interesting. Could both of you also share a story on how a founder approached you, especially maybe during these tough times, that made you feel this is could be feasible? I mean, not like a miracle story, something that these founders can go home with.
I'll give you two. I wouldn't necessarily, because I don't want to expose, and if I just say what the company says, I will probably expose it to every Israeli on the room. But I'm going to say this. I saw that there are two practices in DEX that I actually like. And I think that at this day and age, your DEX should include them, unless they're not real. Let me explain. I think that today, when you write your deck, you need to show, if it exists, if COVID-19 actually created some sort of unique opportunity for you, point it out. Devote a slide to it. Some areas, okay, the easy one, Zoom. This is godsend for them. Okay, but not everyone is Zoom. But if there is some angle that you can capitalize on as a result of COVID-19, make sure that it's not lost in your deck. That's one thing. And the other thing that I expect to see, and only do it and only write it, don't force it. The other thing that I saw, and I'm mentioning it because I saw it in a deck of a company that we are now in a process of due diligence, is that they've shown us, here is what we originally planned for the next 2 years, based on what we've done so far. We understand that this is not the same planet anymore. Here's our revised conservative plan as a result. That is something every single entrepreneur has to show us these days, because the first story, the story about the past or the normal days, shows us this is the potential. This is what this company would be if everything was normal. And this is us realizing that realities have changed. But I want to see both of them, because if you don't do it, if you only give me one number, I'll take your number and I'll cut it down by 50%. So do the homework for me, self-serving for you. So this is best practices that I've seen without revealing the name of the company, which I almost just did.
All right. Thanks for that. Chris, you want to share something with us that founders can take home that caught your attention, made you invest in the company?
Yeah, I think it's, for me, there's nothing like spending 8 weeks at home with your children and your family to kind of like make you kind of ponder life. And I'm really keen on, and I've always been keen on, founders giving me a story and sharing with me the human element of their business. There was a founder, Brian Daly, who started a company a year and a bit ago called GramPal, again, non-fintech company. And what his company was all about was solving loneliness with elderly people. So obviously there's a grain of the population. A lot of us live far from our parents. And that was kind of his modus operandi. And over the last few months, he's really honed that proposition. And he now has a platform which would allow someone like myself to have a platform to arrange for, carers to come to visit my parents, someone to drop off food, maybe a beautician to come and do my mother's hair, things like that. And it actually has a great COVID-19 use case now. I think this would have been a business irrespective of COVID-19, but now it seems abundantly clear. And it becomes really clear for me because I'm sitting in my back garden in a different country than my parents, and I can't get to them if they're unwell. And so I think that for me, I like founders that can really tell a good story and can kind of share, like I said, a human element to their business. So just kind of get back to thinking about who is your customer, and I think you'll find your true north that way.
I love that. So as a general view, when you look around you, because you're in so many different geographies, you're from London and Paris, and you've seen the whole of Europe, and obviously you're speaking to a lot of your investor friends, and of course the managing directors at Techstars. Do you see that, are you optimistic that investments are being made now, or should these founders on the line wait a while, grow their business, and not spend time on, hitting new investors? I mean, this is not a yes or no answer, just what is your feeling now?
What I've observed is that in April, most of the deals that closed are deals that were started before the crisis. So it always takes 2 to 3 months. And so it was really the back of that deal flow. Now we are in this new post-COVID territory. Clearly, there is less deal flow, and it's the physical constraint of not being able to meet. And I've also observed that a lot of entrepreneurs say, I'm not going to start a process right now. I'm just going to wait for September once people can travel and we can meet hopefully. So I think on both sides, people are waiting. There are few seed rounds that close on Zoom, but again, you need to overcompensate the lack of physical meeting by more trust, more proof.
And I'll just add to that. There's a famous blog or post called "Lines Not Dots," and the deals that are closing now that maybe were the conversation started 3, 6, 9 months ago. They can only close now because you create that dot and that second dot and that third dot, and you can connect the lines, right? So when you speak to an investor and tell them like what you plan to do, what you need to do is then communicate in 30 days time, let's say, and say, hey, I said I do X and I've actually exceeded that. And you need to, and that's the only way that an investor can connect the dots. And that's even more important now, where they can't physically see you or meet you face to face, right? So, if I were speaking to somebody and it started the conversations 4 months ago, I'd hope that I'd have at least a half dozen data points, right? So start the conversations now, even if you don't plan to raise now. And obviously, if you're in a position where you can say, hey, I'm not raising, but I want to create the relationship with you. I want to tell you about my company. I want to give you some data, and I'd like to give it to you on a monthly basis. Most VCs would say yes, right? Because you're giving them something for nothing, right? They can choose in the future not to invest. But if you can actually promise and then over deliver and then remind them of what you did, that helps a VC make their mind up.
There's nothing to lose by doing that. The most you lost is some virtual ink in your email. No reason not to do it.
Well, my perspective actually on the Israeli market is that a lot of angel investors are looking to invest. Maybe it's because the Israeli mentality is sometimes to look for good deals. And it feels like this is a good opportunity to find good deals. So a lot of angel investors are calling me to ask me if some of the companies they've spoken to before now have lower valuations, and is this a good time to speak to them? Which of course I hate, but I do have a feeling that things are kind of picking up in terms of angel investments here in Israel. So for all of you Israeli founders out there, we're going to run out of time. So do you want to leave these amazing founders with any last thoughts on this? And again, wow, I'm getting some great feedback in the back channel on how you've been helping them. So thanks for that. Do you want to leave them with some action items, thoughts, dreams, anything you want to leave them with?
Yeah, I'll leave them with something I wish I would have done earlier in my entrepreneur career, and I think it's the right time to do it if you're starting. It comes back to the network, is to find the super connectors in your network. We all know people that are super connected. I mean, they're like 10 times connected than we are. These are the people you want to talk to regularly, like every 2 weeks, every month. And you need to be top of mind for them, because they will think about you. They will connect you actively to potential recruits, co-founders, investors, clients. And it's really important to nurture your network at this moment. And it's something you can do marvelously remotely.
That's great. That's great advice, Chris.
Okay, I agree with the connector piece. Absolutely. I'll add something different. I think that many of you are really, really good sort of selling yourselves in person to both investors and partners. And now you have to learn how to do that over something like this, right? And you can tell, like, I obviously haven't prepared myself. I'm wearing a hoodie. What kind of image am I giving here? Probably not a very good one. But I would say get some feedback on like how you come across on this type of medium, if this is going to be the new normal. I was actually speaking to a woman, Anna Boone, Boon, and she's a person who's worked extensively with my portfolio companies over the last 3-4 years. And she's an actress, and she actually specializes in helping corporates, but most certainly founders, come across well in their presentations and on stage. And I was talking to her the other day, and I was like, gosh, you know, what a huge demand there must be now, emerging demand, for not just founders, but anyone, like big companies, and for advice on how they can come across better via like a platform like Zoom. So, you know, she actually said that she'd be willing to work with a few founders initially, you know, for like an hour for free, and then, you know, potentially actually dial into important calls, and then give founders feedback on, you know, what they should do to improve everything about that call so they can be more effective next time. I think investing a little bit of your limited resources into that type of resource, doesn't have to be Anna, would pay a huge dividend, because if 90% or 100% of your correspondence is like this, you need someone to tell you how you should improve to be more effective.
That's a really, really good tip. Thanks for that. That's really great. Noam.
2 tips. One of them I actually thought of when I saw a nice, funny meme with Pooh Bear and Piglet walking down the stroll, and Pooh goes, "What day is it today, Piglet?" And Piglet says, "What fucking difference does that make?" And coughing. It makes a lot of difference. Please remember to have some sort of routine during the week. Don't lose it. Don't lose it as founders and as professionals, and don't lose it as leaders of startups. Make sure that your team has a routine, and also make sure that that routine includes a weekend. The weekend is when we charge ourselves, and I'm beginning to hear of a lot of folks that are beginning to create their own fatigue. The weekend is the weekend. Take at least one day off. Make sure your employees do it. We don't know how long this call is going to be. So make sure that you have that at least one day a week where you recharge, where you drop the phone, where you drop the inbox, and you let yourself go, and be respectful of other people's time in that aspect, because this is going to be a long call. So that's one thing. And the other thing is something that is true even in regular days. Actions speak louder than words. If you can enforce your team to develop further, you have a lot of time now. That extra feature, that remote feature that maybe wasn't a priority 3 months ago, and now it's critical. Do that, because show me beats tell me as far as investors are concerned every day of the week.
Thank you so much.
And of course, the final one is try to not start drinking before 2 p.m.
That's a good one. I just wanted to say to everyone, you know, on behalf of Techstars and all these really smart people, thank you so much for being here. Remember that Techstars is like a cover when there's a storm out there. We've invested in over 2,000 companies. We have about 60 programs around the world, and everyone, managing directors of all had companies, succeeded and failed, raised a lot of money, and are all here to help you and to be the connectors that you wanted us to connect with. This is what we're here for. This is what this AMA was for. Please connect with me on LinkedIn, Facebook, Connect, Techstars Connect, anything that you'd like. Thank you so much for this brilliant advice from these 3 very wise men here. And I wish you all very pleasant times. Go out there and succeed and create and be the entrepreneurs you want to be. Thank you, guys. Thank you, Noam.
Thanks, everyone.
Thank you so
Stay
much.
safe.
Thank you so much. Thank you.
Bye-bye.